Good morning, audio morning brief of the U.S. stock market, September 2nd, 8:29 a.m. Eastern Time. I'm Rich Posson. Looks like when I look at the intraday chart of the September S&P futures, the three lines that we showed you earlier in the week at around 45.24, around 45.32 and 45.41. Actually, I think we had that a little higher than 45.41 here a little while ago. Those three lines have actually worked quite well for intra-week, intraday kind of trading. It seems to be using those as support and resistance levels, pivot levels, okay? And what the model's suggesting is early today, let's say the first half day session today, the market should top for a level 4 intra-week swing and move lower. So it can move lower at any minute now, actually. However, a level 4 bottom is likely to occur early today as well. However, that one we can see it can delay a little later. So I just wonder if they aren't going to sell a little bit today as they prepare for the jobs report that's due tomorrow. I hope I got that right. And so it's looking to me as though they might not actually sell it overnight tonight into that jobs report tomorrow morning, which would come out ahead of the market open. I think then that I think this is a sign that they're quite bullish. They don't really want to sell anything. They're just trying to do a little day trading ahead of the report, do what they have to do from a trading perspective. But other than that, as far as their positions for the bigger trends, they're trying to do nothing. They're just going to wait on the report. I think they've come to the conclusion it doesn't matter if the report is bullish or bearish, because if it's bearish, it just means the Fed's going to hold off on raising interest rates, and they always buy it. And if it's bullish, they're just going to say, doesn't matter, because the Fed probably wouldn't raise interest rates anyways, or that the economy is still growing relative to what we see in unemployment and job creation. So I think this is a bit of a hesitation here at these levels. Now, I can't rule out that they get carried away here and maybe even sell it back to 4,500. And I can't rule out maybe they don't like the unemployment report. But it feels as though if they don't like the unemployment report, that they would be too late for an L4 bottom, that they should sell it into the start of next week as well. Which is also a possibility because that's fitting inside the larger trend possibilities. It may not necessarily have a lot to do with that report still. So my conclusion is that we're still due for the larger level 3 bottom this week, and it may show up today on any kind of little setback for a level 4, and then they just continue to buy right after that jobs report, and they're going to buy next week. So instead of getting too caught up in all this little fast timing kind of stuff, just realize I think the market is just hesitating into a level 3 bottom rather than actually try to drop into a level 3 bottom. And keep in mind, the level 3s occur during a month. They're the most important buy-sell signal during a month. It's how we do business in most liquid active markets. It's just a characteristic of human beings, but it's also a characteristic of actual business, okay? And you don't need any news or fundamentals to make it happen. The news and fundamentals can make it more on the boring side, low volatility, or it can make it more excitable. And we would normally think of it making it more excitable, okay? So there's what I've got is I don't think it's going back below 4,500. Now into early next week it could, and it may, otherwise it can come near it. But looking out to next week, as we zoom out for these larger intra-month, the monthly type trends, it looks like another wave of buying is coming next week, okay? And as we zoom out beyond that, then we want to consider that we have a trend up into mid to late December, September, I should say, okay? Sorry for that. I have not had enough coffee today. So I think overall the larger level 2 uptrend is underway here. It's just hesitating because of this jobs report, and then they're going to continue to buy this month. I think we'll still get a reasonable setback late September into early October. Now, other things you can watch is the 5-day average is near the market right now. Watch that for a sign of support. Even if they dip it below it, you have to wonder, yeah, but are they then going to buy it by the next day or even by the going into the close? Now, if you're wondering for what we have for upside objectives for this next leg higher next week, it seems like we need more objectives, so I'll go to work at that. But the objectives right at the moment that I like the best are around 46.05, 46.38, and 46.69 for the September futures. And, of course, the premium should be about erased here, so those ought to be used for cash prices. But it seems like that's quite a stretch higher. But at the pace of this market, it could do it. And there's definitely some people thinking this market is just going to surge right into year end. And it may. We want to keep an eye on that idea as well. So, but for those of you who think it's too far of a stretch, we'll probably come up with some other calculations in between the levels I've just given you, okay? But I don't know if they're going to be that important. I do think the better targets are considerably higher here. And we are going to see a rally next week. So I've already moved back into the market somewhat. Don't know if I'm going to move totally back into the market. I don't need to because, as you know, I use leverage. So I'm already much more than what the market would do in terms of my performance. But I'm more interested. I think I might leave some off the table to just buy during that level 2 setback later in the month. And the current forecast is we'll probably see this market still higher by November. And, of course, the long-term stuff is intact, which we will discuss all this longer-term stuff in tomorrow's weekly update. And keep in mind, any weekly update or any Friday update can be delayed to over the weekend. So not much going on here. I realize this isn't very helpful. The daily 5-day stochastic indicator pulled back here a little bit. To say the overbought threshold. You could argue maybe it's just going to keep lower for some reason, but I'm concerned what they've done is made the market just a little less overbought by resting here for this jobs report, and that leaves them enough room to rally yet again and to get it back to extremely overbought. So I think we're witnessing some kind of a reset here, and they really don't want to sell much going into this jobs report, and the reason is they still have more to buy. There's apparently plenty of money out there and people are still accumulating and putting on positions. Even when you hear others getting out of the markets, like the hedge funds are getting out of some of their stocks, it's like somebody can replace them. And I also think when money is leaving the market can still rally because some of the hedge positions are being taken off as they're leaving the market, and it just supports the market. It keeps it from coming down on that liquidation. Interesting little setup. I have nothing to say on all the outside markets right now. Past results are not necessarily indicative of future results. Got to give the bulls a chance to higher later this month, but still be on the lookout for just a little bit of selling here going into this jobs report. Thank you.